Hello everybody, welcome back to another valuation investing video, and today I'm be going over Lululemon stock, in which the stock has really been struggling year to date. As we can see, it's down 48% year to date. This company keeps continuing going down every single day, basically, it seems like. This company is now trading at a $23 billion market cap, meaning that's how much the company is worth as of today. The stock price is at $193, and literally not even a year ago, this company was over $500 per share. So since its all-time highs, this company is down even greater than 48%. It's down over 60% since its all-time highs. And taking a look, if you don't know what Lululemon is a global company specializing in technical athletic apparel and accessories. They're known for their high-quality performance-focused clothing, particularly for activities like yoga, running, and training. Beyond just clothing, Lululemon fosters a community centered around an active and healthy lifestyle. So this company basically just sells athletic apparel to people all around the world. And getting into the key growth drivers, I think that are key for this company, and I think the key is the international expansion for Lululemon and men's apparel. Taking a look at this right here, we can see that the men's apparel actually only accounts for 23% of their sales, while women's apparel accounts for 64%. So their sales are predominantly driven by its women's apparel, but they're trying to actively grow its men's segment, as we can see here down in this graph. Both of these segments are continuing to grow over time. It seems that the women's is growing faster than men's, but if the Lululemon can actually get men's apparel to continue to grow and faster, I think this could be a good growth driver for Lululemon. But I think the other main one is the international expansion, especially in China, as they're trying to expand into China. And as we can see here, with China experiencing up to 39% year-over-year growth with Lululemon. They have experienced 30%, and that says international sales could burgeon by over 30% annually through 2026, with China potentially witnessing a 49% compounded annual growth rate. So if this company has to continue to grow somehow, because in North America it's really starting to slow down and they're growing at low single digits in North America, so they're going to have to find this growth somewhere, and I think the place will be China and then other countries, developing countries around the world. And taking a look here, brand strength. The success of Lululemon's growth strategy is further bolstered by its strong brand identity and extensive loyalty programs. So this company, while it doesn't have a huge moat, especially with all the other competition in this space, you got companies like Nike, Adidas, Puma. All these other companies are competing for the same thing basically as Lululemon, but they do have a pretty strong brand recognition and people know about this company, so at least they have a brand recognition moat. Normally, I don't like that type of moat because brand recognition moats aren't really that great of a moat, because it's not really necessarily competitive advantage over another company just because you have brand recognition. I personally, that is the worst moat out of all the moats, but it at least still is a competitive advantage for Lululemon. And looking here, China is as a growth engine for Lululemon. They just keep trying to sell in China, and it's really helping them grow this company at near double digits, even though North America only represents a few percentages. As we can see here in their recent Q2 earnings, we can see the total revenue increased by only 7% year over year, 8% on a constant currency basis, reaching $2.4 billion this quarter, and that is pretty slow growth, especially compared to over the past 5 years. This company was growing insanely fast, but that growth is continuing to slow down over time. Another thing I like about Lululemon is look at this continued repurchase shares, spending $430 million on buybacks, which shows us confidence in the long-term prospects. Like it says here, normally if a company's buying back shares, that shows us, especially if the stock continues to go down and they keep buying back, that shows strong confidence in the future of the company. Also, their gross margins actually improved, but looking at geographical performance, revenue in the United States grew by only 2%, which is their main segment too. So the growth is very slow in their main geographic segment, and that's the problem with Lululemon, but Canada saw a 9% increase and China reported a 22% increase. And then the rest of the world is 17%. So this is where all the growth is coming from. Basically, internationally, it's not a huge problem, but they do have to continue to grow internationally for this to be worth it, in my opinion. Taking a look at the revenue of Lululemon here, we can see that over the past 5 years, revenue continues to increase over time. But as we can see, look at the growth rate. The growth rate continues to decrease over time. Normally, we want to see this pretty straight or even increasing over time. But at least it's still growing at a decent rate at about 8 or so percent. It's not fast growth, but it is growing pretty decently. Also, taking a look at the profit margin. Also, taking a look at the profit, we can see the profit continues to increase over time. So at least the profit is continuing to increase. It also is kind of increasing slower over time, but the profit margin is actually increasing a little bit. So at least the profit is increasing faster than the revenue. And then once again with the shares, as we can see, they continue to buy back shares, which is really good for us shareholders. If you're a shareholder, this is a really good sign that they have good confidence in the company. They're buying back nearly 4% each year as of the recent quarter, meaning each year you're actually getting an increase in ownership percentage as they buy back shares. Since if you own the same amount of shares and there's decreased shares, if you divide the amount of shares you own by those shares, if there's less shares in the entire market, then you actually own a greater percentage. So this is why I like Lululemon. At least they are buying back shares, but nonetheless, I'm still pretty worried about Lululemon's competition. That's my biggest worry with this type of company. They have a lot of competition going forward, and mainly clothing brands. It's a trendy type of product. So over time, it's kind of hard to predict what's going to continue to grow unless there's actually a huge competitive advantage. But it's basically just a trendy type of product, so that's the problem with Lululemon. Taking a look at the 7-step stock analysis here, this is the 7 key metrics that I like to look at, and as we can see here, we get 7 out of the 7 key metrics. PE ratio at 13, this is half the stock market, so this is trading at a very low valuation, and if you bought it today, this means you'd pay $13 for $1 of earnings per share. Also, the forward P ratio at 13, so both the valuation metrics for the trailing P ratio and forward P ratio is very low, meaning you're paying a low amount of money for the amount of earnings per share you're getting. Also, the growth rate of this company continues to grow at a very fast rate, although it's decelerating. On average, it's grown at 22% and 23% for the revenue growth and then the earnings per share growth. So this company over the past 5 years has been growing very fast, but I definitely don't expect this type of growth in the future. I would say maximum growth would be high single digits from Lululemon. Also, the shares outstanding are decreasing over time, which is another good check mark, showing confidence in the company, and you're actually getting an increased ownership, and that's why the earnings per share also increase faster than the revenue, because they're buying back shares, so you actually get more earnings per share. And now for the debt to equity ratio, which gives us a sense of the debt and balance sheet of this company. At a 40% debt to equity ratio, that is another check mark and seems pretty good for Lululemon. It's a pretty low debt to equity ratio, meaning if you took the total value of money they have in equity, if you multiply that by 0.4, that's how much debt they have. We normally want that less than half, and which it is, so that's good for Lululemon. And also, the expected EPS growth rate by analysts is greater than 5% at 8%. The only thing I don't like about Lululemon is this right here, the big discrepancy from the past to the future in the growth rates. It's really decelerating and is a problem with me for Lululemon, but nonetheless, let's get into my intrinsic value calculator to see if this company is worth buying today at this huge discounted price. So taking a look at my intrinsic value calculator here, I have to use future assumptions for the next 5 years in order to get the true value I think that Lululemon is at and what I think we should be paying for the stock and if we should buy it today. So for the annual revenue growth rate, as we saw, analysts expect about 8%. Right now they're growing at 8%, but that's also earnings per share. I think for the bearish case, this might be very harsh, but honestly, I think this is what's going to happen. We could do 4% for the bear case for the next 5 years. Do I think it's necessarily going to be that low? Probably not. But let's just go with 4%. Now for the base case, I'm going to go 6.5%. I think that's fair. And then for the bullish case, I think 9%. Is that likely going to happen? I highly doubt it, but this is the bullish case. I think Best case scenario, they start to expand even greater into other countries, not just China, and they continue to grow this over time. And also, this gives into fact that maybe that men's segment starts to grow even faster than expected. Now, for the future profit margin, going over here, taking a look at the profit margin that it's recently been at, it's been from 15%. We saw a huge dip, but that is kind of an anomaly. So basically, it's from 15 to 17% profit margins. So for the bear case, say competition starts to eat at Lululemon just a little bit. Say the bear case, let's do a 14% profit margin. Base case, I'm going to do 16%. And bullish case, I'm going to do an 18% profit margin. Now for the future PE ratio. I think for a PE ratio for a company that's growing at only 4% doesn't have a huge competitive advantage. Right now, they're trading at a 13 PE ratio. I think a fair PE ratio for a company growing 4% is probably about 14. Now for the base case, I think a fair PE ratio would be about 17, and then for a bull case, 20 because of that growth rate. Now for the shares outstanding, as I said, they're decreasing their shares at about 2% each year, and they really ramped up that share buyback. So for the bear case, I think we should let's do about 1.5% for the bear case, and then let's do for the base case, let's do 2.5%, and then for the bullish case, let's do 3.5%. With that being said, with my intrinsic value calculator, I get a 3% return on the bear case, 14% return on the base case, and 25% return on the bull case. I would say using this intrinsic value calculator, this company looks very good, but me personally, I'm still probably not going to buy this company because just intuition with this company to me, there's too much competitiveness in this industry, and I think in the future clothing trends could go away from Lululemon, but that's just me personally. I just think the prospects of the future are a little shaky just because, like I said, the low growth in the United States, not even growing at 2% almost, it's just so slow that me personally, I want to invest in a company that's growing nearly double digits every single year. And right now, I think Lululemon isn't at that. And say if we applied a PE ratio for the base case of what it's at today, I think you'd make market average returns. So honestly, the only way I think you should buy this company, and this is just my opinion, is if you think that they can grow that multiple expansion, if they can grow that P ratio in the future. But honestly, I think if you're lucky and it gets up to a 17 P ratio, then it would be a good price to buy. But me personally, I'm staying away from Lululemon just because, once again, the competition is just too much for me. I like to invest in good moat compounding machines. And this company, although could be a compounding machine, I think it's a decelerating company, and it's just not a good moat in this company, especially overpriced products where there's not really anything that stands out from other competitors. So with that being said, thank you guys for watching this video on Lululemon. Give me some feedback in the comments on what you think about this company. Please subscribe, hit the like button, and thank you for watching.